let's get straight into Bitcoin. So first of all, it's very similar to what I talked about yesterday, but I want to get across the idea. And the idea is that right now we are breaking out. We are actually at $74,000, which is actually a crucial level of where we had to break, and the level is here. I'm on the 4-hourly time frame, the previous high, which is at $74,000, and we have broken that previous high right now. Now going back on the weekly, I have the EMA ribbons right here, and they usually act as strong support and resistance during bull and bear markets. For example, the last bull market, it has acted as key support areas here, 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 and here. And of course, in a bear market, it's acting as key resistance. For example, the one I just marked, or here in a bear market, the last bear market, it was acting as key resistance, and as long as we stay below it, we are in a bear market. Now, what we also do usually in a bear market is we bounce from these levels, and while we didn't quite hit it here, we are coming close. So do not expect us to go higher than that, especially that we are in a downtrend right now, but we can get close to it. And the level I think we're gonna reach is around about $74,000, which is, if I put across the bull and bear market support bands, which is co-aligns with the EMA ribbons, is around about $73,000, which is, I think, where we are most likely gonna be breaking down from, and eventually hit around $50,000. In my opinion, around September to October of this year. Now, what I want to show you guys is why I think we're gonna stop out around about the $80,000 region and then make a reverse from there. It's because if we compare it to the last cycle, you can see here we had a double top and a mid-cycle kind of small bear market, and then we went higher again. We are currently at this stage in the market. Look at this stage we are at right now, and this is also where we are right now. The point that we broke last time, where we had resistance, was right here, and that is pretty much in the same range as during the peak before we made a second higher high. This is where we started trading around, and that's also where we had resistance before we went further down. Now the same thing can be said right around now, right? The point is around about these levels here, around this trading area between the highs, and that would bring us to around about, here we can see it's $74,000. Let's say it's at the low here. You see that the low of this candle, this could be very much happening. This will bring us to around about $81,000. So around about the $80,000 region is where I think we will see a reversal. Now, what I also want to highlight is that usually we have less drawbacks every time. I mean, for example, if we go to the first cycle, and we can see here from the top to the bottom, we had 85% drawdown. If we go to the second cycle, from the top to the bottom, we had about 80% drawdown. So the drawdown is becoming less and less every time. Last time it was about 75% drawdown, and if we follow the same pattern from the top to the bottom, let's say we have 70% drawdown. I mean, that's 60% we're going to be at 50,000. At 70% will be around 36,000, which I don't think we're even going to be hitting, because we have all these institutions, Michael Saylor, ETF buying of Bitcoin. So Bitcoin is becoming a lot less volatile. Also, if you look from the bottom to the top, for example, the second cycle we had 13,000%, which is insane. Then the next cycle from the bottom to the top, we had about 2,000%. Last cycle from the bottom to the top, we had about 600%. So it's becoming less and less every single time. And the key point here to note is that while we might pump a bit higher to around $83,000, eventually I think we're going to continue to go down as we are in a bear market. Next thing to talk about is Michael Saylor keeps buying more Bitcoin. For example, this is the last week, and this is the week before. For example, the week before there was $221 million worth of Bitcoin coming into circulation. As we know, already 20 million Bitcoins out of 21 million have been minted, are in circulation. And actually, through their asset STRC, Michael Saylor and MicroStrategy is buying more Bitcoin every single day than that Bitcoin comes into circulation. And actually the average is 3.5 times more Bitcoin is being bought by Michael Saylor's company than new Bitcoin is being brought into circulation. Of course, you cannot do that forever, and this is giving me great FOMO actually. I mean, there's not enough Bitcoin for everyone, and that's very much true. There's 21 million Bitcoin. There's a lot of Bitcoin which is lost. There's Bitcoin that belongs to big institutions which we can never own. So not even every millionaire can have a Bitcoin, by far not. So if you can get one Bitcoin somehow during this cycle, if you go down to $50,000 and you can buy one Bitcoin and then hold that for a few years, you're going to be very happy in a few years time. And also looking at Bitcoin here, comparing it to the last cycle, the black cycle is the current one, we can see the average drawdown compared to the last cycles. So for the first cycle, we had a drawdown of 90%. Then the second cycle here, the red one, we went down to like 65%. And also the third cycle. And right now we can see the drawdown at the same point in time is a lot less. So Bitcoin has a lot more buyers that are buying Bitcoin, and therefore the price is not dropping as low because people realize the value of Bitcoin. Finally, let's talk about the FOMC meeting, which is happening in 20 hours time, which is when the Federal Reserve decides on interest rate decisions. And right now there's a 89% likelihood that interest rates will remain the same at a target of 3.5 to 3.75%. And there's even a very slight likelihood of 1% that we're going to even increase the interest rates. Now, obviously, I don't think that will happen, but we're definitely most likely not going to see a reduction in interest rates. If we go to the next meeting, to April, there's a 94% likelihood that we're not going to reduce the interest rates and keep them the same. June, there's a 77% likelihood that we're going to keep the interest rates and a 21% likelihood that we're going to drop by 25 basis points. So why is that? Well, that's because energy prices have gone through the roof. And as a result of energy prices, I mean, let's look at the energy prices first of all. Crude oil is at $103. And we can see these are insanely high at the moment, very much outside of the trend that we are normally trading on, which is around about between $60 to $70. Of course, because of the current situation of Iran, and that has led to a lot of inflation. This is a company called Trueflation, and they are an independent company advising on inflation. They usually give rather lower numbers, but even for them, what they say is that within the last month, inflation has gone up by a full 1%. So it has doubled essentially in the last month just because of this crisis happening right now with energy prices going up. And therefore, as inflation is high, we cannot reduce the interest rates, because as the interest rates go down, taking new money from the bank and taking loans and access to money becomes cheaper because you pay less interest on the money, and that will eventually lead to more inflation. But as we already have high inflation, we cannot lower the interest rates. So that is it for today's video. See you next time. Bye.